Welcome back and welcome guys to a new video. This week I'm going to be doing a market breakdown on gold. Make sure you like and you subscribe and you keep up because most of these videos update on each other, and we are going to be doing some chart work today. So far I've kind of fiddled with the chart because after last week I just wanted to reach a point where I find the understanding of where the market is trying to head onto. So just to make a breakdown and make you keep up with me, what happened was that on the previous week we were trading within this range over here, right? So as the week progressed, we saw significant breaks of structure where the market had momentum and broke the price. So right, I'm talking about on the 31st, which was Monday or Tuesday, if I recall it correctly. And since then, we've pretty much had a bearish run until we get a break of structure, right? And on the previous video, if you were watching, I said that I'm only going to look to take sells if the market does give us a valid break of structure, right? Meaning that on a higher time frame, this is classified as a change of character on a higher time frame. But in a smaller time frame like this one, what I'm looking at is seeing significant price action break of structures. Okay, understanding that and looking at where the market is by the time the market breaks these first points. Initially it broke, but the market didn't close below these lows on a higher time frame. If it goes smaller, it would classify itself as a valid break of structure. Then you got a correction and then we traded, giving us a valid break of structure, right? The reason I missed this entry because I was paying attention to the fair value gap that was lying above here. So this order block only got clearer now because after not getting an entry here, I just left the market. But essentially this is the 1 hour order block that the market traded into. Since if I'll give you another perspective, is that instead of having a change of character there on the 1 hour time frame, you still can identify this as a liquidity standpoint, meaning that since the market was bullish, we are still in a very bullish market, even though we broke these lows here, right? For the fact that we do have this, essentially this supply over here, we are bullish. So any of them anyhow can be done to make the chart simpler. But my main point is that over here we found we could classify this as liquidity if we're looking for buys, and still classify this whole move as a pullback. We can classify this as internal range liquidity. This is sell side liquidity that needs to get mitigated, but after the mitigation we get into a order block, right? This is my entry model. This is classified as one of my entry models that I hoped about. And after that the market just immediately moved. As you can see, we just got tagged in. The market would have made a tag in and then moved immediately out of there, right? Going on a lower time frame, if this entry was hard, if this entry was very risky, getting another reduced risk entry would have been here on this 15-minute fair value gap. This is my version of saying, getting into a reduced risk entry, meaning that from this move until the initial entry, these pips you would have missed out on. But if you want to have a low risk entry, that is a very, very high probable, would be this buy over here, right? Always enter on the 50% of this zone. And one thing you should always one thing that is to our advantage at this point is that we have a high here, and we initially have the first target that is sitting above here. So we know that this high still has not been taken out, yet we are still bullish. So that is another reason that would ultimately draw price higher, meaning that we have a draw on liquidity here, but our point of interest is all over there, right? This is our first exit. And since the market never got to fill in my 1 hour point of interest, my target remained, right? This was my execution model. This was the model that I was aiming to execute. So even if we were bullish, trying to trade back into this area, we know that this would have been a good area to close and like go out. Understand? So that got invalidated. This entry model got invalidated during the NFP that happened last week, right? The bullish momentum that board actually invalidated and closed above, right? So zooming in to the time frame, zooming into different time frames and a lower chart, paints a picture. It paints a clearer picture to say that what was price doing, what was it attempting to do, how could we put ourselves in a position that we can be able to capitalize such moves that has momentum, and have an idea of where we can exit. Sometimes the market might move higher, or sometimes it might move lower than a certain target. So having your exit points, being satisfied with a certain amount of pips is what makes things better. It's what gives consistency, right? So jumping on a 15-minute, we will see if we do identify valid structures above the structures that can be traded. So as we can see, then I then marked out a fair value gap. This was the first and initial fair value gap that essentially brought the momentum within the market. And as we can see is that we broke lows here. We broke lows. The market attempted to buy. The market attempted to buy with this candlestick here, but that wasn't the case. But okay, coming from this standpoint, before this right side of the market occurred, we must always look at the left side. So as on the left, we have internal range liquidity. It means that we have this high over here that wasn't sure that was it a true high, was it a strong high or not, and we had lows over here. But essentially what the market did first was that we broke lows, right? On a small enough time frame, this can be classified as a break. The candlestick closed below, and the second one opened and wicked below and then moved up. So this wouldn't be surprising to be a fake out, because the trend on a lower level can be confirmed that it is bearish. So this this was actually a fake out. In an entry model scenario, it would be classified as a Judah swing, but that's the setup that I do not trade, or I have not thought about the probability of trading it. But understanding the footprint that price leaves behind made me understand that this was the most valid, even though we have other structural points. But initially, this is the highest fair value gap within this entire bearish trend. So understanding that the market could potentially trade there, right? It could move higher and clear buy side liquidity, right? It can clear buy side liquidity, but having fair value gaps as exits and entries is the best option, is the best narrative to have a consistency that you can add to the account. So coming back to here, during Friday and at 7:30, I'll classify this as the London Open. From 7:30 or before London Open, the market started accumulating, right? We didn't have price action. There was no momentum that was essentially in the market, right? So if we look at the power of three or the AMD, we can say that we had the beginning of the manipulation phase, even though it has started earlier. But then understanding that the phase that we're in, I'm just going to be classifying it by the day, not the trend. But the beginning of Friday essentially started with an accumulation, right? We started with an accumulation, and then before London, that's when this first bullish candlestick played out, right? Which is 14:15, which is quarter past two. We had a manipulation, and then that's when the market started shooting up. Okay, that meant that we just had manipulation going on because this could be a fake out, this could move, but what we know and what we just realized now is that price was trading into a level, potentially tagging in and like immediately moving, because now we understand the higher time frame narrative. The higher time narrative still stands that the market is bearish. We just had to seek the liquidity that is sitting above here. We just had to seek price and rebalance so that we understand that the clear narrative is that we are bearish. I was still standing on my bearish. I still am. Now price has painted a clearer picture. What it needed to retest had retest has already been retested. So within the manipulation phase, we got a big buy, before even New York opened, because the New York opened this time, right? So prior to the event, we had strong bullish trends that all led all the way up to our fair value gap, and we had a mitigation, right? Entering here again would have been risky, but if you understand and were willing to risk with understanding what just happened, then getting an entry here, especially with such a small risk, wouldn't have been a hassle, because looking at where we're going or what the market is trying to do would have painted a clearer picture, regardless of the event. If there's a structure that you know that is in your setups, that is what you trade more than once, more than frequently, it doesn't matter. Enter the setup, always enter it, because you know the probability of it playing out, the price, the standpoint of it, you know. But essentially for me, I wouldn't have entered, you understand, because now I'm looking for a market maker reversal model, right? Since we have our AMD session, meaning that we had our accumulation, then we have our manipulation that fakes out. Now I'm looking for a ray trace and then get a distribution, right? So that is what I am waiting for. I'm waiting for price to unfold. So essentially, again, I am waiting for the market to just make a break of structure, right? We have our structural low here. This was the low before the market made a new high. So this low over here, I would classify it as sell side liquidity from now, because the buy side liquidity is essentially over here with this high, right? 2004, 2003, and 997. So that's our buy side liquidity, and our sell side liquidity still stands here. So again, price is trading within a range, and for me to enter my sells, I want to see a market make a valid break of structure, retest into a fair value gap, or we can trade into a breaker block, or we can go into an order block, and then only then can I say I'm looking to enter the market and actually, go short. That's gonna be the only time that I actually trade, you know. the draw is on liquidity, where the market retested the last time. So the liquidity that lies here below is what I'm targeting, but only after the market just grabs sell side liquidity and we have a clear bias. We confirm that we are indeed still bullish, bearish, and that this move here was essentially just a pullback. And I'm just gonna be journaling this for now, and yeah.
Woke up in the plane, we just landed somewhere above the equator. I'm smoking triple A, ballin', hitting triple doubles every game, bearing the fruits of my labor. I gotta say, it got me feeling like Carlito. I could spit an apple in your face. Numbers doing far better than they projected. Labels use my work as point of reference when I drop a record. Keeping up with me just got them looking desperate. Keep my emotions and the business separate when it's time for dealing with the unexpected. No need to be ducking the pressure. No, I am not that nigga Rivera, but I'm with it whenever, wherever. Took a lot of effort to hold it together.